Hello, today is the 13th of December, 2022. Let's go over our disclaimer, review our predictions, and make some calls for tomorrow. I also think it's important to take a new look at the longer-term picture. Well, this is my trading plan for tomorrow, although I may not trade at all. It's an FOMC day, and that leads to wild moves, and I admit I can't predict them with a sufficient degree of accuracy, even though the moves can be big. So if I were going to trade, these are my rules. And if you like the channel, please click like. Well, look for the pattern with the early low, and so we could gap up. That's what this is, and tomorrow should also have the early low. We had these lower targets, 39.52, 32, and 39.52, 22. When we had the gap, those are off the table as far as time, not as far as price. They're still favored to print at some time. I said I wasn't going to risk any money on the calls today because we did have the CPI report, which came out. When it printed, we got to cross another target off the list, 4,749, so we have to add these and take these off. And ultimately, today's pattern said we'll see 40.83, and probably more than that. This is a review of what we said. Said a gap open can make the analysis nugatory, and that's what happened. I had no way of predicting a big move like that, and that's why I just don't predict what happens overnight. We got an ultimate buy signal here, so ultimately we should see 40.83, We got a buy signal again in the afternoon. The minimum printed immediately, but you don't have to stop at the minimum. We get a big drop all day, but closed over all these lows. It's a positive pattern, and unless you gap and take these lows out promptly, should see higher prices even if we don't close higher. The other side of the coin, that this is normally a bullish pattern with an early low and a late high, and if it doesn't close near the high, it's negative and leads to lower prices unless we gap, promptly take out today's high. So the odds are good we're going to get a gap open tomorrow and promptly take out either the high or the low. Here's the daily pattern. We got bar 13 from DeMarc's sequential sell. We also got bar 13 from a combo sell in combination in alignment. Last three bars don't have to follow all the rules. These mean the market's overextended. Now, one of three things happen. One is you work out the overextended condition in terms of time, which means you consolidate. That's what's been happening lately. The other is you work out the overextended condition by dropping, and ideally, if you're going to drop, correct in price, ideally you're going to do it pretty fast. The other thing which can happen is you can get more overextended by printing 9 more bars of rally, obeying his rules. And the final thing is it can fail, and if it fails in grand style. At this point, we don't know which of these things will happen. Just say we'll overextend it, but if it fails big. Well, here's our daily chart. When this dropped here, I said one of my trading rules was when you had a sloping trend line like this and you dropped in a straight line, at some point you should return to the trend line. And that point came today. We still have these much lower targets from from valid signals. The catch is a lot of sell signals just aren't working. One of them was yesterday. We had a perfectly valid sell signal on Friday, which didn't work. When these trend lines meet, that's a perfect place for the rally to stop. Instead, it went through it. This blue trend line is a perfect place to stop. This red trend line is a perfect place to stop. I'll grant you it was rejected immediately, but it would have been clearer if it didn't break in the first place, particularly when this green trend line held. When breaking it would have caused a collapse, and the red trend line didn't hold. Well, here's the junction point of the trend line. It's where it's a logical place for the rally to end. If we take out today's high and keep going, we've overcome major resistance from these trend lines, and we've killed this count. Doesn't mean it'll happen. Just tells you to be cautious if that fails. Here's a 1x1 Gann fan line. It hasn't been the ideal trend line, but it did have resistance here, resistance here. We're meeting resistance again. If we break through it, it's breaking through resistance again. It's another reason this is a logical place for the rally to stop, if it's going to stop. Well, I had this beautiful count. When we traded over the high of wave 1, that invalidated the count. And I start to scratch my head when a number of valid signals stop working. Because when signals fail, if they're good signals, when they fail big. Let's look at what's happened on the way down. Well, so far it's easy to count 5 waves down. We have a rally up into the 4th wave of lesser degree. If it's the right count, if this is where it stops, there really is no excuse to travel much higher. You really want to drop right from the open gap and undercut these lows if it's going to work. Now, the FOMC announcement can lead to some pretty big moves. We saw what happened with today's announcement. If we haven't taken these out by the time of the FOMC announcement, I'd be very leery about being short, because just as you had this huge move today, there's nothing saying that since a number of sell signals haven't worked, if we haven't already confirmed this top by trading under these lows, and preferably much under these lows, that hasn't happened by the time of the announcement, we could overtake this. There's no reason we can't if the sells don't work. They haven't failed yet, but they're threatening. This is the futures contract, continuous contract. Spikes in volume are associated with market lows, and there's a spike in volume. So here's this volume spike here, here's this volume spike here. This could be a low, not a high. We also got a Bollinger Band reversal buy signal on the volatility index. So I'd be very cautious here about being short unless we could follow through immediately. Signals are mixed. We'll use these rules. Wednesday's pattern has the early low. It could gap up. If we've made a major high here, there really is no excuse for starting to drop in spades almost right from the open. The FOMC announcement comes out 2 o'clock Eastern Time. It typically leads to large swings, which I can't predict with any sufficient degree of accuracy. Going into the announcement, I'm almost always flat, and those swings are too much for me. There's a higher MEJT target. Ultimately, it should print. There's no time limit, but usually we don't have to wait long. Today's normally bullish pattern was negative instead. Unless we gap and overtake the high of day promptly, This should lead to lower prices tomorrow regardless of how we close. This is the same signal we got on Friday and it failed. Just a word of caution. We dropped all day and couldn't close under midday lows. Unless we gap and promptly undercut today's low, we should trade higher tomorrow regardless of how we close. The percentage of S&P 500 stocks over their 200-day moving average has improved. One of the things I said last week was the one thing that was missing for a collapse here, which I thought was pretty likely, was that the breadth hadn't deteriorated. Breadth has improved, even though we had this reversal today. The volatility index gave a Bollinger Band reversal buy signal. There's a volume spike in futures, and that usually accompanies market bottoms. We have the marked sell signals on the daily charts. They work best when they work immediately, and when they fail big. We've got 5 waves down from today's high. If that was a major top, ideally it should be productive fast. Overtaking today's high would need only to be maintained through the close and confirmed with a higher print tomorrow to signal the markets overcome major resistance. If we're going to drop here, there really is no excuse I can see for going over today's high. And if we're going to drop, and drop with conviction, I want to see it drop almost right from the open and keep dropping. If we haven't gotten anywhere by the time of the FOMC announcement, it's possible shorts could get really hosed because a number of other sell signals just have failed, and they're valid signals. So tomorrow has the early low. This should be as high as we go if we're going to drop. And I'm going to be flat going into the FOMC announcement, but this thing could do a 180 on us. And it's entirely possible October was the bottom of the market low, or of the bear market. Don't have enough evidence to say that yet, but it's possible. And that's today's call.